It's time to completely expose my experimental $10,000 stock portfolio and explain how I'll be investing it all year long. Smash the like button and let's get into it. Stock investing seemed to become so hyped after the past couple of years, but 2022's bear market really seemed to be a buzzkill and a lot of the gains went up in smoke. If you were invested during that time, it might have been really discouraging, but part of the reason this video series is so important is that when people are discouraged, when the market's down really low, that's one of the best times that you can get into investing. Now, this may not be the exact bottom, but my years of experience in the stock market tell me that future me is going to be happy that I put money into the market in 2023. Now, in that time of managing a corporate stock portfolio, I never felt free to share everything that I was doing. But now I'm going to show you everything that I'm investing in with this account and exactly what my performance is, no matter how good or how bad it may be. If you appreciate that transparency and you want to learn about investing in the stock market, be sure to subscribe to the channel. Also, this is not day trading. You don't have to be glued to a screen all day to do what I'm doing. I try to check in at least a few times a day on the market, but if I can do this while starting a new company, then I believe that you can learn to invest at the same time too. Admittedly, I don't have a lot of spare cash lying around after quitting my job to start a new company, but I'm going to do what I can with the $10,000 that I have. I want this to be a ton of fun for all of us, and I'm planning to keep you up to date on Instagram, so be sure you're joining me there as well. Before we talk about timing and my first buys, which I'm going to share in just a few minutes, let's quickly cover some basics about stocks and about the account that I opened. Remember, the stocks we're working with are shares of ownership in companies that are traded publicly, so anyone like you and I can buy and sell them with just an app or a website, so that's what I did. I usually trade in Fidelity or TD Ameritrade, but for this I opened up a dedicated Webull account where I'll be taking screenshots so you can see what's happening. If you'd like an account too, you can use the link in the description to open one up. You can pick pretty much any platform you want to. Remember when I said, I think I'll be happy in a few years that I bought stocks now? I think it's time I explain why I think that, and we're going to keep this nice and simple. First, not every stock is going to be better off in a few years than it is today, so what I'm talking about right now are really the major indexes. I do plan to touch on individual stocks in future weeks, but for now, let's just focus on the big stuff. There are some incredibly intelligent people who trade in the stock market, but ultimately so much market action is managed by human psychology. Right now, what we want to be watching for are signs of extreme fear or pessimism in the market. The first of those is margin debt, which is money that's being borrowed to trade in the stock market. Anytime that metric gets above about 55%, it can be a signal of a major market top. And in early 2021, that figure actually got up to 70+%. And we all know what happened after that. Late last year, though, that number had fallen by 100 points, all the way down to negative 30%, meaning that a lot of excess money had left the market, and that's a great sign. The second signal is the put-call ratio, which is another indicator of how overconfident or underconfident investors are at the moment. When the ratio is up high, that's what we want to see, indicating more fear closer to a market bottom. That metric went pretty crazy in the past few weeks, pushing all the way up to 1.6, which I think may be the highest that I've ever seen it in my years of trading. Both of those signs suggest to me that people have retreated and that now is a relatively good time to buy. So I know I want in, but what exactly do I buy? Well, indexes like the NASDAQ and the S&P 500 are probably some of the safest calls right now, but at times like these, I have a special tool that I appreciate. First though, please remember that this is education and entertainment and it's not a recommendation. I want to be in the market, but I also want to have cash available if I see a great stock. So what do? I use leveraged ETFs. Now put simply, these ETFs return 2 to 3 times what the corresponding index returns. Now part of the trick here is that these funds fall very hard when the market drops. So I have to be really careful not to chicken out and sell, or I could take a huge loss. In fact, it's even more important to buy these funds closer to the bottom than it is to time the regular market because of how hard they fall. I'm prepared for that and willing to take the risk, so I decided to spend about $6,000 on these leverage ETFs, leaving me about $4,000 in cash. Now, I don't know which index is going to do the best moving forward. Maybe it's the S&P or the NASDAQ, or maybe it's small caps. So I decided to do $2,000 each of 3 triple leveraged ETFs, TQQQ, UPRO, and TNA. The key here is that my $6,000 is gonna act more like $18,000. Now, I wanna know what you think is gonna happen, so comment below and tell me. Since I made my first buy on Friday, January 6th, I'll start comparing my performance to the market from the close of the previous day onward. The market was already moving up on Friday before I made my buys, so the NASDAQ ended up about 2.6%, the S&P up about 2.3%, and I was up about 1.1% by the end of the day. It could be a wild ride, but I think I can catch up. Remember, I'll always share screenshots to prove that I'm actually doing what I say I'm doing, no matter how good or bad things are. Thanks for watching, please subscribe to the channel, and I'll see you next time.